The market has entered a powerful risk-on phase, propelled by breakthrough in US-Iran peace negotiation. You might be wondering why safe haven like USD-JPY has been weakening while risk assets are pushing higher. Following the truce announcement by President Donald Trump, the market reacted. But let's be clear, negotiations are still ongoing. Tension hasn't been fully resolved. But before I go deeper, let me take you back to some of my previous posts. On my Telegram channel, I made a projection that equities are expected to rally in Q2. Also, on X, formerly known as Twitter, I made a post that if USD is strong right now, it's because of capital flows into safe haven. And if the geopolitical uncertainty in the Middle East normalize, if there is some sort of resolution, dollars could lose momentum. Immediately after the truce, guess what? The market reacted. Dollar lose momentum, stock market rally. This isn't random. It is fundamental and basically seasonal. Fundamental is the force behind the price that tell the market direction. Seasonal, on the other hand, is the timing that points where markets should be heading at a point in time. Take for instance Q1, Q2, Q3 and Q4. These are the year cycle. The markets move in cycle, not random. JPY has been heavily shorted in the interbanking system. Why? Firstly, seasonal is already priced in, pointing risk on bullish sentiment in Q2. Secondly, there has been a large supply of Japanese yen in the interbanking system because Japan imports most of its energy. So they have to sell JPY in the interbanking system to buy their energy, their oil. In these cases, this puts constant pressure on the yen. They have to sell JPY in the interbanking system to buy USD so that they can buy their oil. And this increase demand for USD. Then you see pairs like USD, JPY, CADJPY. CAD also benefits from oil price because Canada is one of the largest oil producing country in the world. So generally, pairs like GBP JPY, Euro JPY, Aussie JPY, Kiwi JPY, CHF JPY, they all push high. Basically, USD is a petrol currency. So this isn't random. It is fundamental. And generally, looking at the overall economy, Japan economy has been weak for years. As a trader, you should already know this. This isn't new. Let's talk about the USD. Amid the geopolitical tension in the Middle East, we've seen increase in demand for safe haven. If oil price push up, indirectly it benefits the USD because the USD is a petrol currency. If you are buying oil, you are buying in dollar. So here is the shift. Following the truce announcement, fear dropped in the market and confidence returned. We've seen in the price of an volatility index, the VIX. The VIX has been down. Stock market also rally. The S&P 500 and the NASDAQ. NASDAQ reached all-time records. Dollar also lose momentum. So now let's add inflation. Looking at the US economic data, the recent data shows that inflation is higher than the previous one because of high cost of energy. And again, US GDP has declined in the fourth quarter of 2025 by 0.5%, following the incline of 4.4% in the third quarter of 2025. When inflation is higher than GDP growth, this puts negative effects on the economy, which is bad. This could also impact the weakness of the dollar. Basically, central banks were selling their gold to buy their own currency because strong currency fights inflation. And now that inflation is returning to the economy, if the trend continues, then we see gold price rally. Gold tends to react to inflation expectation. So basically, gold is used to hedge inflation. This isn't random, it is fundamentals. And again, seasonal. So fundamental tell the price movement, why the price is moving, why seasonal is the timing that tell when to expect it. As a trader, you should already know this and be able to form your bias around this. So if this video imparted your knowledge, hit the likes button and follow for more. If you are watching on YouTube, subscribe to my channel. I will see you in the next video. Peace.